Welcome back. Micron shares up more than 300% in the last 12 months, with this most recent report showing revenue tripled year on year. But might the stock be at an inflection point? Our Christina Partsenevelos looks at that in today's Tech Check. Morning, Christina.
Good morning, Carl. Like you said, Micron just delivered one of the strongest reports of this AI cycle. Revenue and earnings miles ahead of already high expectations, and they're even guiding to 81% gross margins next quarter. And yet, look at shares, down 4%, down yesterday post-earnings. You're hearing the same frustration that you heard after NVIDIA. You know, essentially, if this kind of print doesn't work, what will? But with Micron, investors are just wrestling less with demand and more with how long these economics can actually last, the duration. So on CNBC this morning, Micron CEO spelled out why the numbers look like this. Listen in.
Memory today is very tight supply, and supply cannot be brought up that easily. And you are seeing that in our results. You are seeing the value of memory reflected in our strong financial performance in Q2.
On the earnings call, management said AI has turned memory essentially into a strategic asset. So they guided to record EPS, earnings per share, told us key customers are still only getting half to about 2/3 of the actual memory they want. And they highlighted their first 5-year strategic customer agreement, although it didn't provide a lot of details about that. But 5 years, normally this is a very short-term cycle for memory. Free cash flow is expected to more than double quarter on quarter, even as CapEx climbs, which CapEx may be a concern to some. The street is definitely leaning in. Daiwa and Cantor Fitzgerald both moved their price targets to $700. Other companies like Bank of America, Wells Fargo is around $500. And several analysts now argue this memory upcycle really doesn't peak until 2027 or even 2028. At the same time, though, Micron is taking full-year CapEx to at least $25 billion and signaling another meaningful step back in 2027. So you've got this tension in the market. The fundamentals and the analyst community saying the train isn't slowing anytime soon, while the market worries these margins might be as good as it gets. In other words, peak, even if the cycle has more room to grow. And so that's why you're seeing a sell-off. And the cleaner way, actually, to play the tension may be the equipment makers tied to advanced memory, like Applied Materials on your screen or ASML, even as the market fades Micron on this peak cycle fear.
Yeah, even though the numbers were so great, is this the best that Micron will deliver, I guess, is the question percolating amongst those in the analyst community. But as you point out, no price target cuts that I can see. How would you place Micron, and how does the industry place Micron in comparison to its competitors in the memory space, like an SK Hynix or Samsung?
I think a lot of investors treat all three as just a lump sum. Some say that maybe Samsung is a little bit more advanced, especially with their high bandwidth 4E, so just more advanced memory. But I think overall the market is treating Micron like NVIDIA and even Broadcom to a certain extent. These are heavily traded names, heavily owned. So when you have earnings that are, matching or confirming an already high bar, it turned into a liquidity event post earnings. Like, let me get out of this name and rotate into some other things because I don't see that much more upside post-earnings. That was the big question with NVIDIA. Why did NVIDIA go down? Why didn't NVIDIA move that much this week after GTC, their big graphics conference thing? So it's really just a demonstration of how the market is thinking right now. They want that alpha. They're moving into names that they believe there's a lot more surprise and upside. And from these guys, they're not getting it.
It's interesting. You can feel a lot of the analyst community, Christina, wrestling with whether or not memory can kind of decouple from semi-cap. I love this Wells note that argues that, memory's putting CapEx into the ground, which is normally when you would start to talk about peak CapEx.
Yeah, I read that note too, and so that's part of the reason why I brought up some of those semi-cap names. I just mentioned ASML, but there's also like KLA. There's a few others too. With that Wells Fargo note, I think even the concern was the moment you start putting it in the ground, that becomes peak for memory. But they're still arguing that memory has at least 2 years to grow because, one, these customers are only getting maybe 50 to 60% of their demand. You had the CEO not only of Micron, but SK Hynix saying that they see this shortage till 2030. Samsung saying that they're now signing agreements that last between 3 and 5 years. So that speaks to the visibility of demand in the near term and why this may not necessarily be peak cycle. Whether you believe it or not is really up to you and your portfolio. But semi-cap names are definitely a way. You're seeing a lot of notes now. Even Mizuho saying semi-cap is the way to go too if you're scared about memory.
Interesting to see how investors are sort of positioned and now watching Micron down 4% on the day. Christina, thanks. It's Christina Partsenevelos.